What's going on, folks? It's your boy Aristotle, all right, with the Rari full throttle. We back with another episode. We're going live today. We're going to talk about gold, Bitcoin, silver, everything. So we're going to chart. That's what we're going to do for the most part. Some sticky notes over here. And then we're going to take notes and everything, folks. Let's get right into it, folks. Without further ado, I ain't going to waste you guys' time. All right. So number one, what do we have? We have silver up here, right? We got silver. Now, silver took a nice dip. So what you guys would do is you would grab this tool right here called your info line, correct? And then you would bring it from the top to the bottom, right? And then as you guys can see, what do we have here? We're 36% drop in 2 days, correct? So what do we do with this information? I'm going to show you guys what I personally would do, and I'll give you guys a strategy on what to do, okay? We also have gold. Gold. We go to gold, same thing, but gold is down about maybe 15%. Yep, 15%. Okay, so gold is right at the 21 EMA. I'm going to show you guys what we did in my chat. Almost a fail-proof way to make money. All right, I could say it has an 80% chance of hitting for anybody who watches this. Okay, now this is what we did in my chat. I bought a call and a put. This is called a straddle. Okay, a straddle is when you buy a call and a put, and it's an option strategy that basically banks on the fact that one of them will fail and one of them will double or triple, right? So think about it. If I made 192% on the call, but lost 78% on the put, and I bought them at the same exact time, you guys will see what? Exactly. So that's pretty much what I did. And this is a fail-proof way, and I'm going to call some. Hopefully, gold or silver doesn't gap down too much. Could this be a retracement? If you are a believer in them, then this could be a potential dip buy. If you are someone who's just trying to bank and, catch the trend, then this could be a potential play that's easy to make 100 percent in one direction, and one of them will fail and one of them will go. All right, make sure you guys comment stock so you guys can tap into my Discord where I call these plays. But yes, folks, this is the easiest way to bank on the volatility of gold and silver. Okay, so this is what's going on. Now, I want to show you guys something. Also, let's look at Bitcoin, BTC. Oops, let's go to the BTC. Sometimes you gotta click on this one. Boom. Okay. Now I want to show you guys something live. All right. We have a few things to look at that I was pretty much charting this. And if we kind of go to the weekly chart, you guys can see it. But for now, let's stick to the daily. What pattern is this? Everybody guess. What pattern right here is this? I'm on IG Live and I'm on YouTube Live. So I'm going to see if you guys know this. What particular pattern is that? Let me let off these MAs, by the way. Well, the white one. I see you guys see that one. Don't worry about that one. Don't worry about the yellow lines, these white lines right here. All right. You guys got it. Somebody said a bear flag. So both of you are right. Head and shoulders and bear flag. Really. All of you are right. Head and shoulders, bear flag. So I'm going to show it on YouTube Live. Let's see who's the first person to catch that one. Well, this person said a head and shoulders. Ike Griffin. This person said a bear flag. All right. Yep. So a bear flag. That's what this is right here. So that's what broke down Bitcoin. And it's funny because I've been drawing this bear flag for a minute and then it finally did its thing. So this was the bear flag that broke it down. If you don't know what a bear flag is, it's this. And basically there's a flagpole and a flag and then a break of structure. Okay. So that's what a bear flag is right there. So somebody said rising wedge. I mean, they're not, they're close. So a bear flag broke down Bitcoin. Now let's look and see what area of resistances are the best buys. And if we kind of zoom out a little more, let's kind of zoom out here. As you guys see, we have what is called support. So remember, support is your floor, resistance is your ceiling. This is technically resistance, but this is a resistance zone. Okay, so why is this resistance? Because resistance is your ceiling where things bounce down from. You see it bounce down from here, and then it bounced down from here, and then it bounced down from here. So this is a form of resistance, but the volatility turns it into a zone. So you kind of got to draw out a box here, and I'll show you guys how to draw that box. Basically, you go right here on trading view, and then in this icon area you go to rectangle, and I want to show you guys. So basically, as you guys can see, the reason I made a rectangle here is because we have a high right here, and then a zone. So we kind of go and drag it out, and that's our area of buy. Okay, so that's pretty much what we see on Bitcoin. It's a demand zone. This could be a buying opportunity, yes. Now remember, folks, Bitcoin is on the premises that the dip will come back. So what you guys need to realize is 79K minus, so that's about 80K. Let's just say 80,000 minus 26,000 is what? 46,000. So that means if you own one Bitcoin at the price of 80,000, $46,000 is yours for the next time it returns to highs if you're patient. That's kind of how you got to read Bitcoin. And the same thing with the S&P 500. So the lower it drops, the lower average you have, the more money you make when it rises back to highs. Now, how do we know it'll rise back to highs, you say, Aristotle? Let's talk about it. Let's look at history. Remember, the stock market and Bitcoin is all about the premises that history will repeat itself. So that means right here, the first time Bitcoin dropped 82%, that was the biggest bear market. And then it rose what? Back to all-time highs again one day. It dropped again right here, 71%. And then it rose back to all-time highs again, right? Then it dropped what? 53% right here. This was another drop. And what did it do? Rise back to all-time highs. And then we have one 76%. So Bitcoin is very, very volatile. The S&P 500 drops between 20 to 40%. Bitcoin is on average dropping in the 60s. Okay? If you average all of these out, it'll be about a 60% drop. So right now, Bitcoin is at, let's see. So remember, the stock market in Bitcoin is all about history repeating itself. A 40% drop right here. Okay? So that's something that you have to realize. This is all about history repeating itself. Make sure you guys comment the word stock if you're on Instagram Live. And if you're on YouTube Live, then, I'll post a link in the description or visit honeydripnetwork.com. Okay? So if we look at the S&P 500 SPY, same thing, folks. Now, SPY is a little bit less volatile. And if you're an older person or a person looking for retirement and don't like too much volatility, I recommend getting you some SPY. Now, some people believe only in Bitcoin. I am not one of those people. I do believe in diversification for the reasons you see today. Bitcoin is very volatile. If you buy at the wrong spot, you can really be red. But if you stick it out, you hold it for years, that's what you got to do. You have to believe, right? Now, SPY is the same thing. If we look at history, right, this is the '08 housing market crash. So I'm going to teach you guys a little history lesson. Remember, if you want to be successful in investing, you have to believe that history will repeat itself. So right here, we're down negative 58%, right? So, well, 56% right here. Now, what does that tell us? That tell us that history will what? Repeat itself. And what did it do? That's the '08 housing market crash. That's one of the worst. We haven't had a worse crash since this is the dot-com bubble, '01, '02, right? 48%, 56% is our worst crash ever since candlesticks and stuff got involved. Of course, the stock market been open. If you look here where this dinosaur is, it only shows up until about 1993. As you guys can see right here, 1993 is where it shows on our trading view chart, SPY. Okay. Now, since 1993, it was a full bull run. So let's look at history. Let's look at the whole history. 1993, I was not born yet. All you see through history is a bull market. So if you were investing, which most of us were not, in 1993, you were profitable. Now, I'm gonna show y'all when I started investing. Okay. Now this is the dot-com bubble, 46% drop. Again, what happened? It returned back to all-time highs. The housing market crash. What happened? It returned back to all-time highs right here after a 56% drop. And then now after that, we had a decade bull run. After the bottom of '08, this was a lovely time to invest, I tell you. A literal 10-year bull run from '08 all the way to 2018, right? And then what do we first get? These little drops don't count compared to all this. This is nothing. A 10-year bull run. So for all of you asking, can we run for multiple years? From 1993 to '01 we did, and from 2008 to 2018 we ran for a long time. So do not discount that fact as well, that yes, through history we can. Now we have this drop. This is the trade war drop with Trump. What happened? All-time highs got reached. This is the 2020 COVID drop right here. What happened? Back to all-time highs. So notice every time it dropped through history, it will repeat itself and return back to all-time highs. So now that you guys know, and you also got to think about this, folks. If history did not repeat itself and it wasn't going to do that, right? Then what would be the point of a 401k? What would be the point of a lot of things? What would be the point? Why would billionaires create companies based on a 401k and a life insurance if they did not believe that this thing would rise for the next 30, 40 years? And then remember, they're already talking about the tokenization of the stocks. So what does that mean? That means one day you'll be able to, like me and you talking, right? I'll be able to send you shares of Apple just like that at 12 o'clock at night. So instead of trading Bitcoin at night, we'll be able to one day trade companies as assets. So I could open a business and I could say, I only accept Tesla shares. And you'll be able to tap tokenization a Tesla share, correct? So you guys got to think about that. When technology finally hits, you guys will see that we'll be able to tokenize stocks and we'll be able to send them like that. So we got a lot of things in the future. And then you guys got to think about what we just added as well. We added I'll show you guys real quick. I'll bring it on the screen. We added the technology to now trade weeklies. And this is why I say it's a great time to be alive, folks. We added the technology to trade weekly option contracts, Wednesday and Monday expirations. So not only is tokenization in the future, but now zero data expiration is in the future for our day traders. All right. And then you guys got to also think what's going to happen. More option trading prop firms are going to happen. Okay, they can comment on X now. That's dope. X users can now comment. At first they could not. Now they can. So that's pretty dope. If you're on X, say something. But yes, folks, We got the tokenization of Bitcoin, well, not Bitcoin, but stocks, where you'll be able to trade assets and wire assets overnight, and you'll be able to use companies as a, as a token